You, right now, listening to this video, might be winning a large chunk of silver for free. Two of you, actually, so your chances just doubled. All you have to do is click one button. Subscribe. Once we hit 100,000 subscribers, I'm going to jump out of an airplane and announce the two winners mid-flight with a GoPro attached to my helmet so you could watch it all unfold. I'm going skydiving in celebration of 100,000 subscribers so you can celebrate winning while I'm literally falling out of the sky, hopefully not to my death. Make sure you don't miss it because this will be a beautifully horrific sight to see.
Connection established.
This week's specials at Miles Franklin are 90% junk silver coins, only $1.99 over spot. Also pre-1933 $20 gold liberties, $65 over spot. And last but not least, 1 ounce palladium bars, $119 over spot. Email, text, or call me, slayer@milesfranklin.com, and I will hook you up. Let's hypothesize what silver's price would be directly based upon the physical silver market. Today, the actual size of the silver market, according to Bloomberg, is $5 trillion. Well, 5 trillion divided by 20 billion, which is the physical market, is 250. 250 times 20 silver spot price equals $5,000 an ounce. If you frequent this channel, you might have seen me cover this article before. I feel it is very important to understand where they're coming from because numbers don't lie. The 250-to-1 ratio, this leverage that they mention, leading to $5,000 silver, which by the way, with spot price at $25, it really would be $6,250 silver, is technically what it should be. We're not saying that it will reach this price. He's saying that the actual physical silver spot price is not only extremely undervalued, but that it is an illusion compared to the real value of an ounce of physical silver since it is totally disconnected from reality. So we're not saying silver is going to reach $5,000, but if the price were not suppressed, not rigged, manipulated to these extreme degrees with COMEX corruption and the imbalance of paper silver versus physical silver, what this means is essentially every ounce of silver you hold in your hand, up to 250 other people own that same ounce digitally. They think they own that ounce, but if they tried to turn in all of these contracts into physical delivery, it would expose this facade, which would be, in reality, on a fair 1-to-1 scale, would be $5,000 silver. So we are talking about the logistics of this, but this does not mean we live in a perfect world. In times where this facade has almost gotten exposed, we've seen the prices dramatically rise, like the Hunt brothers owning, some say, up to 70% of all the silver and turned all those contracts into physical delivery, which in return pushed silver to the highest price it's ever been, still till this day. But what happened? Well, the government wasn't going to let these three billionaire brothers do that. It would have exposed the silver corruption in the market. So what they did was ban silver on the spot. They just straight up banned silver on the COMEX. You couldn't buy it. You had to sell it. And that is still till this day the highest price silver's ever been. People like Ted Butler mentioned this a lot, the COMEX corruption, but also, even more importantly, talks about how this type of manipulation will not survive forever. It has to come to an end someday, and silver's true value will come to light. Another critical component to what he's mentioning is that the price is an illusion compared to the real value of an ounce of silver since it is totally disconnected from reality. See, $5,000 silver may seem totally crazy, but who can pretend knowing exactly how an ounce of silver is worth after decades of manipulation and turning real investors' demand from the physical market to the paper one, and years of exponential monetary printing by all the world's central banks? So here's the physical market versus the paper market, and here's the difference. This is what you really have to understand when we talk about price manipulation, how it's happening, and the possibility of silver's true value coming to light. So the actual spot price for silver has no real value and is not legitimate when we seriously compare the real physical silver market to the paper market and these financial derivatives. So according to an article by Bloomberg, which has already been a reliable source with their published data, the size of the global annual silver market is equal to $5 trillion. According to a recent interview with David Morgan, which, by the way, is somewhat of a friend of mine. I talked to him on the phone the other day. He sent me a signed copy of his book, and I've interviewed him before and planning on doing another one soon. The annual physical silver production is roughly 1 billion ounces. So with silver trading around $20 currently, and that was at the time of this article, this represents a $20 billion market for physical silver. So the size of the physical silver market is of $20 billion. The difference between $5 trillion and the $20 billion number is that Bloomberg's $5 trillion number represents the entirety of the paper silver market, including all paper financial products, certificates, options, ETFs, etc., derived from the real physical market that allows investors to be exposed to silver. The 250 to 1 ratio between the paper market and the physical market is that, meaning for every ounce of physical silver, there are 250 ounces of paper silver circulating in several financial products. In other words, only one contract or certificate issued out of 250 could be convertible into physical silver. That is the silver market being leveraged 250 to 1. That is very important to remember, that the paper side is flooded with these contracts, but nobody turns in the contracts to physical. If they did, it would expose this facade. So if regulation agencies are claiming the goal is to create a new fixing for silver that would better reflect the physical market, notably from pressure coming from countries like China wishing to have their say in the fixing of precious metals prices, which now they are actually doing. The leverage between paper silver and physical silver is at risk of radically evolving. And what's going to happen to the price when it does radically evolve? Well, the sky is literally the limit. Let's hypothesize what silver's price would be directly based on the physical silver market. Today, the actual silver market, according to Bloomberg's 5 trillion divided by 20 billion, which is the physical market's 250. 250 times 20, which is silver spot price, is $5,000 an ounce. Even if we aren't going off the 250 to 1 ratio, even if it was 500 to 1, even if it was 20 to 1, we're talking about a much, much higher price, with silver being manipulated, held down purposely on the COMEX and these other exchanges to manipulate not only the price, but the investors. Like Andy says, price is the greatest tool of misdirection. They can buy up all the silver for cheap, which you see them doing, all the billionaires, the wealthiest people, most successful people, central banks, and the most powerful countries buying all the silver and the gold as it is cheap. And then once the price rises, they will have the upper hand. You got to remember that $25 for an ounce of silver, which is so useful, a critical mineral that we need for war, technology in this new digital age, for electric vehicles, for solar panels. It's in everything. $25 for an ounce is laughable, to say the least, where gold is above $2,000, which basically just sits around in vaults and is worn on people's wrists and necklaces. There's something going on here. So here's the conclusion. Every investor holding silver in the form of financial products without the possibility of verifying the physical existence of their investment should ask the question as to what will happen when more holders of said products will ask for physical delivery. That is what happened with the Hunt brothers. What is going to happen when all of these paper contracts try to get turned into physical, but then the reality hits where there's not enough physical for all these people to get their silver that they think they own? In reality, we already know what will happen because one of the larger banks from the Netherlands already defaulted a little more than a year ago on its gold certificates by settling customers in cash. And that's what would happen, along with massive delays or just not accepting these contracts into physical, period. Look what happened to the nickel market. Look what happened to the Hunt brothers doing this same thing as well. Someday, COMEX corruption will get exposed. This cannot go on forever. And once that happens, like Ted Butler says, think of the highest price of silver you possibly can imagine, multiply that times 5, and that is where you lie. Once again, though, got to reiterate, we're not saying silver will reach $5,000 an ounce, but that's literally, mathematically, what it should be, going off of the numbers of the entire market, 5 trillion, divided by the physical market. There's no reason the entire market should be $5 trillion where the physical market is 20 billion. There's a massive gap going on here. This is manipulation at its finest. When you can hold that ounce in your hand, just think about how many other people digitally think they own that same exact ounce, but they don't. That's why I say if you can't hold it, you do not own it. Let me read this part again because this is so important. If the price of silver were based directly on the real physical silver market, silver's price should be $5,000 an ounce. If you even incorporate the gold to silver ratio on top of that, this makes it even more accurate, because gold is 90 times or around 90 times more valuable than silver. The gold to silver ratio is around 90 to 1. It dropped a little bit as silver is now outperforming gold, which was expected, and it will continue to. But even if gold is at, let's say, $5,000, and you divide the gold to silver ratio, let's say, to 16 to 1, which it was for thousands of years, so it's not too crazy to assume could happen someday, especially since silver has a million times more uses than gold. Well, let gold with $5,000, divide that by 16, that still puts silver at hundreds upon hundreds of dollars. And that's being lenient. That's being favorable towards gold still holding more weight. But what if we imagine a world where silver's totally disconnected from gold, as it is disconnected from reality and disconnected from the dollar? Well, the sky is the limit, but we don't live in a perfect world, do we? No. But right now, I can confidently and comfortably say that $25 for an ounce of silver when gold is above 2,000 is laughable, to say the least. And then once you understand how this is happening, the way it's happening, and looking forwards, you get a better idea on why $25 silver is a steal, and also why all the most successful, biggest banks and wealthiest people are also buying boatloads of it as well. Anyways, I'm going to wrap this video up here. I always enjoy this article because it puts things into perspective mathematically on how worthless silver truly is right now. Anyways, I'm going to wrap this video up here. Thank you so much for tuning in. Make sure to subscribe. We are approaching 100,000 subscribers. I'm doing a huge giveaway and celebration along with many other surprises and lots of fun stuff coming in the future. I hope you all will be a part of with me. Thanks for tuning in. This was Silver Slayer. I'll see you guys tomorrow. Peace.